bank as a platform is a generic term that means a lot of different things to different people, but at Starling, really it's all about our tech and our infrastructure. I think one story that we like to say is really we're the first users of our own infrastructure, so we're the first people that were using our infrastructure to connect to the different schemes, to build our own platform.
So I think it's a good question because banking as a service, there is no norm. Like the term emerged in 2010, 12 type of thing, but it's like so many organizations doing banking as a service in a different way. So for us at OpenPay, it's really providing access through a single API to a variety of providers of banking and payment services, enabling essentially corporates to either use them for themselves or actually use them for their consumers, whether they are SMEs or retailers, to launch new propositions.
So I have a slightly different view. I actually think open banking itself is an example of banking as a platform. So I actually think that what you should see is an agnostic scenario where providers or service providers provide banking services into a brokerage platform that can then be consumed by applications and users. So I actually think the whole concept of a single bank providing banking as a platform is completely alien to the concept of open banking, and it should be a many-to-many model where you have many consumers, and I don't mean consumers in the context of retail banking, I mean applications that consume services exposed by many banks, and it should be agnostic.
Okay, I've got a sort of slightly different view on this. When we set up ClearBank in 2014, it was to deal with the issue that the UK market was locked. There wasn't any choice, there wasn't any real opportunity to get direct connections to the payment schemes. The existing suppliers in the marketplace all had conflicts of interest. And the example I always use is that there were 44 building societies in the UK providing mortgages and home improvement loans, and 39 of them were not supporting current account products for their customers, which meant when their customers wanted to go and get a mortgage or a loan, they went home, pressed P for print, and printed out all their bank statements to prove their ability to repay the mortgage they were trying to get. So when we put together ClearBank, we wanted to do one thing only and do it well and do it impartially for the market. And so what we did was we set up a clearing bank, which is completely different from any other bank in the UK, save the Bank of England, because we're the only bank in the UK that can repay all of our customers' money on demand. We also don't compete with our customers because we think it's very, very important that as their banker, we support them, we don't compete with them. And so what we've done is we've grown very, very rapidly. I think we've got 300 people working, hopefully not still working, but some of them will be, just down the road here, basically supporting the UK financial services industry. We only provide services to regulated businesses. And then those regulated businesses can participate very, very fully in the open banking environment and the vision that Mark's got. Actually, Nigel's got.
So our definition of banking as a service, there is no definition, is our sort of our view on it. We started Rails Bank for a couple of things. One, we design enough as social for social good, because there's 2 billion unbanked in the world, and accessing financial services we believe is a right and not a privilege. So that means you need to go and start changing the economics of banking. You need to go start changing the democratization of access, so it allows, you call them consumers, you have the apps and other sort of brands, any other businesses who want to put financial services within their offering. They can do that in a super simple, very fast, secure, compliant way around any market that they want to deploy to. And so we also have a massive belief as don't compete with our customers either. We see that as a massive conflict of interest. We also, where we are regulated, we believe in giving all the money back to the customer, so we're not leveraged up. We have 1-for-1 money from all our safeguarded funds, so a very similar belief on ClearBank on that. And it's all about speed too. These days we work in the world of Twitter-type APIs. You can get things out to market fast.
So it's kind of interesting that there wasn't a single similar answer, but there was a lot of similarities between that.
I would question the whole banking licence thing as being an advantage at all, frankly, because that also comes with a huge cost at having the infrastructure to have all of that. So you look at cost to income ratios and things like that, it can be very difficult, which is why I think the open banking model of having the ability to access the data, because data is really where the opportunity to create real value is. So I think it's right that organisations that provide services around open banking need to be regulated. It's obviously less of a regulatory burden than having a full-blown banking licence. But the reality is it's the access to the data and what you can do with the data that is the real opportunity. So I'm not necessarily sure that having a full-blown banking licence is either an advantage or a disadvantage.
I know our name says Rails Bank, but we don't actually have a banking licence. And the FCA has brought this up on a few occasions. Depends on the product you're doing. We consciously didn't go to have a balance sheet business. We consciously didn't go into balance sheet because of all the overhead you have on balance sheet. And the only reason you have overhead on balance sheet is, and this was from the chairman of Feudal Bank, who Sophie used to work, had a wonderful quote, which was, Nigel, you know we can do anything we want with the deposits that we have in the bank. Which are neat money you're not allowed to do, just FYI. So you can use it for cash flow, you can leverage up to loans, you can take it, you used to be able to pre-ring fencing, give it to your capital markets business to go punting with. So, and it creates very sort of interesting outcomes, hence the massive amount of regulation around it, because if you're taking deposits and you can do anything with them, you have to have a lot of prudential regulation around that to make sure the system works and you don't abuse it. So we decided not to, because with the opening up of the markets, we came in slightly later than Clearbank, when Mark Carney and the lady who's now CEO of Visa, whose name's just escaped me, which when she was advising the Bank of England, she was Deputy Governor of the Bank of England, she was just saying we've got to open up access to markets, and that movement allowed non-bank financial institutions to clear sterling. And that was a big move. The concept of moving money rather than leveraging deposits into loans means that I don't think you actually need a full-blown banking license to offer the basic services which we do to customers. But if we go into credit and other products, we're totally open-minded whether you need a banking license or do we just get direct access to credit markets by using micro-securitization and basically losing equity markets to fund it, which is probably a little bit cheaper than the deposits.
Can I just add something in? I've gone through the joyful process of actually setting up a bank and going through the regulatory process. And for those of you who want to see the photograph of a 2,500 page regulatory submission that weighed 13 kilograms, I'm happy to share that with you. What followed on from that was we eventually got a banking license, and then what followed on from that, our good friends at the PRA and FCA, because they are super good people, they really are, asked me to go along and talk at the PRA to people who were looking to set up new banks. I said, well, what do you want me to talk to them about? And they said, put them off applying, Nick. And there's a reason for that. The regulatory burden on setting up a bank at the moment is significant, right? And there's a good reason for that, because you were entrusted to look after other people's money, and we don't have to look far back in time, 2007 and 8, to realise that all of that went a little bit adrift, right? And so regulation is there for a reason. But regulation is going to change because technology is going to change the visibility of banking to the regulators over the course of the next 5 years or so. As that happens, the internal bank regulatory issues should, hopefully somebody's going to support this, become lighter. Because today it's an administrative overload to justify to the regulators why something happened after it's gone wrong. When you move into a real-time environment, all of that will change.
The MAS in Singapore, massive forward-thinking regulator, that's my department, which isn't a massive penthouse, it's quite a small department actually, have been investing massively in data and access to data within the companies they regulate, the banks, funds, etc. And the MAS now issue what's called happy letters, and love letters they call them, which basically it's like a minority report where they think we're going to go into breach because they have data. So the forward view of regulation banking, financial services, and the FCA have got a big project on at the moment about data, is understanding and getting data to make regulation better and see that, again, coming to the point, I can see a time when regulation goes down in terms of overhead, but up in terms of prudence.
Yeah, so I think I actually, I agree in parts with what everyone else has said as well. I think our banking license and our banking services, the regulation is almost incidental to us offering banking services. Really what you need is the tech, and I think the big thing as well is the access to the payment schemes. I think with Rails Bank TransferWise becoming non-banks with access to FPS and BACs, I think that's the key thing you need. So I think our banking services followed on from our tech and infrastructure, not from our regulatory position. I think, and again, I don't want to jump the gun, but I think a lot of what you talk about when you talk about banking as a service is actually payments. It's not necessarily the platform, it's not necessarily lending. I'm not sure there's really a bank as a service platform out there that has a kind of first class credit offering. At Starling, we're FPS and BACs focused, it's pre-funded, we're not using those deposits for anything else, it's in your bank account. I think on that, really when we get customers coming to us, they want to use our platform, they want to use our services, and I think the API that we offer is relatively agnostic in terms of you know what you're getting really. It's access to FPS in real time via an API. I think that element that we provide to those customers is valuable enough for them to not really have any concerns with it being a competing product. And I think from our point of view, there's other options out there in the market. I think other people are going to be able to provide them with payments, so why not be us really?
Can I play the role of compare for a second then, Will? Because if you fast forward to post-open banking and you say that your license as a bank and the fact that you can take deposits and have current accounts is kind of a bit of a sideshow. If you started Starling Bank today in a post-open banking world and you say it's all about technology, why do you need a current account? Why do you need a sort code and account number? Why do you need all of that ludicrous cost that dates back to branches that no one goes in anymore and all that stuff? Why wouldn't you just have a tech platform that allows customers to agnostically have access to any account, because it's all about getting access to the data and doing clever, smart things that people and businesses want with them? So would you, if you had your time over again, would you just do a tech stack?
Sure, so I think at Starling, so I think on our retail and SME side, the banking license it's a no-brainer, right? You need it to be able to do that. And I think with our banking services, it's actually quite separate from that side of the business. But actually, what we do is actually just all based. I agree with you on that. It's on the tech side really. In terms of we have the banking license, we have first-rate tech. They're kind of it's incidental on the banking services side. I think you could go with a lower regulation really. To be able to offer the same level of payment access, because again, it's about access to the FPS schemes, BAC schemes, that kind of piece. So I think being a bank, it gains us trust, I think, in the market. I think regardless of kind of what other people think, I think it does actually put us out there as people trust banks, they know we're regulated. Yeah. And I think that level of scrutiny, I think, does give our customers a lot of confidence in us. But I think Starling was initially started as a retail bank, and then as soon as we became members of FPS, the next day we had people asking, can we use your tech to access those schemes? So yeah, I know it's hard to say what we'd do going back, but I think I don't think we suffer from being a bank at all really.
I want to pick up on a phrase we've used a few times tonight, and that's open banking, and we're sort of mixing it up on a number of different areas. I was fortunate enough to be at the Nesta launch of the consumer side of what was called open banking. We all sat in a room with the great Dave Birch, who was wearing his shorts because it was a very hot day, talking about what consumers really thought about open banking. And we all fixated by this word open banking, which we as a panel have used a lot tonight. And we worked out that if we actually hadn't had that meeting, hadn't done that, we'd actually gone to the pub across the road and asked the people in the pub what they thought open banking was, the majority of them would have replied, does that mean banks are going to be open on a Saturday morning? Which is actually what they wanted. And I think as an industry, we've ended up with a noose around our head with something that doesn't really describe correctly what we're really trying to do. And I think that one needs to be sorted out, not by me, but all by clever people who know what they're doing. If you look at what's going on, the migration from salaries being paid into the CMA 9 down to salaries being paid into the digital challenger banks That hasn't moved. Hasn't moved in any great numbers yet. And there could be one or two reasons for that. Is it trust? Well, you know, there might be a bit of that, but I don't necessarily think that's probably true. Is it differential service? It could well be that, because there aren't clear differentials in service between the digital challenger banks and the CMA9. But more importantly, it's how do we differentiate and actually give customers something that will change the way that they work and the way that they interact with money, which they need every minute of every day. And I think that looking at what we call this stuff is an interesting place to start with, because if you called it something different, then the marketplaces that we all agree, I think, it needs to exist and will exist, then might have a chance to actually get both business and consumer uptake in a way that's different to what we've seen thus far. So, you're the open banking guy.
I couldn't agree with you more, but there is a title on banking as a service and open banking, so we have to talk about that. And I think that is actually one of the biggest impediments to people using it, partly because their banks don't really tell them about it, because they're actually naively thinking it's a threat rather than a massive opportunity. So I think open banking is a great example of the law of unintended consequences. I actually think the incumbent banks will actually be the biggest winners out of it. So why they're not telling their customers about it and actually jumping from the rooftops, I really don't know, in language that talks about value to them. So we in the industry, we absolutely get caught up on talking about open banking, about banking as a platform, about technology. We don't talk about it in consumer language that is beneficial to them. And until we do that, then it won't be the big opportunity that I really believe it is.
But just putting it in the hands of the consumer without a further explanation beside this is the product you are getting, this is the value you are getting, who cares is PSD to open banking, etc., is actually kind of the way to go.